What's going on, everyone? Lalit here. The fastest way to make $1,000 in dividends. It's a fun question to answer, and everyone has their own way of thinking about it. Dividends can be viewed as a form of passive income, and it's pretty neat getting not just $1 or $5, but even $1,000 passively without even doing anything at all. The dividends you get can be used for fun purposes, just spending frivolously. It can be reinvested into the same stocks, for example, DRIP, dividend reinvestment plan. You can also use the same dividends to be paying off maybe smaller bills while you're building up how much dividend you're getting. So from smaller bills to larger bills to overall funding your whole lifestyle. Typically, the stock market as well is viewed as a retirement vehicle for many. And so dividends coming from your same investments can be used to fund your lifestyle, not just today, but in the long term as well. So with that, the reason I'm wearing this shirt, it's not because Microsoft is the best dividend payer ever, and it's definitely not the fastest way you're going to get to $1,000, but it actually plays into a part of the philosophy of the way I think about dividends, not just for the fastest way to get there or how much dividend you're going to get, but towards the end, I'll be going into it in depth. So with that, if you're new to the channel, we talk about stocks, credit, personal finance in general, and if you want 2, 3, or even 4 free stocks with WEBULL, if you haven't signed up by now, link in the description below. But with that, we'll get straight into it. Super quick, check out the timestamps below to navigate however you wish. To get to the fastest way to earn $1,000 in dividends, first we have to understand, well, how do you even get there? And so, in general, a dividend is essentially a thank you from a company to you for investing into their stock. And so you getting this thank you is expressed in terms of dividend or dividend yield. And so to keep kind of everything simple and understandable, we'll take whole numbers in terms of dividends to understand this process. You also have monthly payers, for example, the stock O, which goes realty income, and that pays monthly. So at 10% a year, and with dividends typically paid quarterly, you're getting 2.5% every 3 months. In the end, whether you're paid out quarterly or monthly or semi-annually or however, the point is, in the end, that percentage payout is what we're looking at in terms of determining the way in which to get dividends every year, and specifically how much that is. To bring the point home, I want to give some real examples, and on top of real examples, I want to give 3 different scenarios. Within these 3 scenarios are going to be stocks that are maybe not the general stocks you may have heard of, and further, they may have different company structures. The reason why this matters is because when it comes to taxes, dividends can be taxed a certain way depending on how you received said dividend. With these 3 scenarios, we'll be covering some stocks which are maybe not the conventional stocks, which also means to say that some of their structures in terms of company are different, and so taxation according to dividends may be different as well. For example, we'll be talking about a limited partnership stock, which, for example, each share is known as a unit and their dividends are formally known as distributions. On the other end, you got REITs, real estate investment trusts, and there the expectation is that they pay out 90% or more in terms of their earnings to shareholders. And so when you analyze metrics such as your payout ratio, which is essentially how much a company is paying out divided by their total earnings, it may be skewed, but understanding the companies and the back ends is not the purpose of this video, but basically how to get there the fastest. And as we delve deeper, kind of more detail about why the fastest may not be the most important, but hey, there's other angles to consider in terms of getting there fast and also making that stay for the long term. Finally, there's some stocks that may not be considered as ethical investing, for example, in certain industries that are not preferred by the total populace, and so just putting it out there as a heads up. So with that, the 3 scenarios are the fastest way to get there. Second is going to be the most sustainable way that once you get there, you're kind of cruising and you're good to go. And third is kind of the 1,000 may come eventually in the long term, but after that, it could be even more and sustained as well. And we'll talk about that. And that's basically how Microsoft plays into that 3rd scenario. So with that, the fastest way to make $1,000 in dividends, it can be, for example, with a stock like GEO. GEO pays roughly 14% at this time. And so doing the math of $1,000 divided by 0.14, you're going to get roughly a little above $7,000. You can do this with any given stock. And so if you want $1,000, you divide that by the percentage of dividend. And so $1,000 divided by 14% is basically how much you need in general invested into said stock to get that much return. So for example, if you have a stock that's paying 10%, then it's $1,000 divided by 10%, aka $10,000. 5% is 1,000 divided by 5%, aka $20,000. GEO is a great stock at 14%, but at the same time, can it really keep up that same trajectory for not just the short term, but the long term as well? The reason I say this is because GEO actually had a recent dividend decrease. And with that, it went actually from 16.5% around to what it is now at 14%. This goes to say that the fastest way of getting to $1,000 in dividends, it's really nice to get there fast, but at the same time, is it going to be sustainable, whether that's 1 year, 2 years, 5 years, 10, 20 years from now, etc. Which brings us to example number 2. And so over here, I'm going to pick 4 stocks, and they're going to be T, MO, NLY, as well as MMP. T has been paying consistently, and not just consistently, but growing its dividend for 20 years. It has around a 7% in terms of dividend yield. And more importantly, when you look at a stock like MO, it's been paying consistently and growing it for 50 years. There are a couple concepts known as dividend kings as well as dividend aristocrats. And in general, dividend aristocrats, they're meant to be, from a formal definition perspective, to be a part of the S&P 500 and been paying for 25 years consecutively, as well as increasing their dividends. And dividend kings is basically the same terminology, but instead of 25 years, you have 50 years. Bringing these 4 stocks into play, the reasoning was basically, what does it look like if you have high dividend payers and then you blend them together? And so equally putting in equal investment into each of these stocks and making a mini pie of sorts. Basically, here are the numbers. We have T at around 7%, MO at around 8.5%, you have MMP at around 10%, and finally NLY around that 11% region. T and MO have good track records, while NLY has a great record as well, but given the type of line of work it's in, basically it had a dividend cut in this year, but at the same time, if you observe kind of how much it yields, and in terms of how long it's been doing that, and where the stock price is, it's a phenomenal stock. And it's more in that fixed income type of area versus a company that's growing and has future dividends that are going to be in excess. MMP is an LP, limited partnership, and so it's a different line of business, but it is a great dividend in terms of starting off where it is and being a partner, aka a shareholder of this company. There's dividends to be seen in the future as well, based on history, financials, and other metrics as well. Whether a company is decent or not is subjective, but based on these 4 companies and seeing the blended rate, it's around 9.5%, aka you would need around $11,000 to get $1,000 in dividends by choosing these 4 stocks. Finally, we have scenario 3, which is going to bring the point home of why I'm wearing this Microsoft shirt. So when I look at dividends, getting to $1,000 the fastest, that's great. And it's good to keep up a milestone because you're getting there fast, and also it's definitive. You know exactly how much you're getting. But when it comes to security of how much are you getting, and are you going to get it in the next quarter or a year from now or later on? And so with scenario 1, we don't really know. We have a huge dividend yield up front, but what could happen years from now is very subjective, and it could be political too, depending on the nature of the business. Now with scenario 2, NLY has been paying more or less in this type of graph, and I do this motion because it's basically paying more or less the same amount, and the stock price as well, it's not heavily declined, nor has it heavily just risen through the roof. Right before moving on to scenario 3, just wanted to put this out there in case anyone was unaware, but basically dividends come from the share price itself. And so for example, today, if the share price is trading at $100 and let's say there's a $1 dividend, then tomorrow, in theory, it should be $99. I mention this because as we go on to scenario 3, this small fact, yet important, crucial fact to me, is what makes me think about dividends in the way I'll go on to explain right now. So bringing a point home on Microsoft, essentially what I value the most when it comes to dividends and looking into how much that payout is basically a term known as CAGR, compounded annual growth rate. This growth rate is important to me because there's 3 parts that I think about. One is, for example, getting to that $1,000 mark fast. That's great. But now once you're there, can it be sustained? And so now let's say you have that as well. But now getting there fast and keeping it up, but can we see this with a graph? Can we see it go upward or even exponential? And so the growth rate is something that I look at, which actually answers this. I'll mention 4 stocks that come to mind when thinking about growth rate, and they are as follows. You got Apple, Texas Instruments, NASDAQ, not to be confused with QQQ, which is the top 100 stocks in the NASDAQ, but rather the platform itself. And finally, on my shirt, you got Microsoft. It's awesome to get to a point of 1,000 dividends fast, and then from fast, you can sustain it as well. But as that dividend grows in the long term, you'll be getting more payout in terms of absolute dollar amount. Granted, the stock/company is good for the long term, and like this, you can see your returns and gains be exponential. It's simple math, and naturally, it looks like you'll need a lot of capital given this dividend percentage payout by these companies, but at the same time, investing into them. And if you have time on your side, you can do it for the long term. And for me, dividends isn't really just my life in terms of one lifetime, but these returns, this passive income, can be actually given for the future generations. So with that, we usually end with a beatbox outro. But overall, I just wanted to say that in general, the fastest way to get to $1,000 of dividends, there's multiple fast ways, and there's always another stock which dividend is going to increase in terms of percentage for it to seem like that could be the most surefire way to get $1,000 in dividends. And that's great, but at the same time, it's not just about getting there, but it's about sustaining it. And then when you look at growth and other potentials and other avenues of how to basically invest in terms of your strategy, there's always going to be some other idea that may make more sense. For example, if you want just a stable payout, there's an ETF, ticker symbol NOBL. You got Noble for all the dividend aristocrats ETF. If you just want that because history has proven itself, then that's an option as well. And I'll put the growth rate up on screen because it's insane in terms of growth. But starting yield is not going to be as much. And so it just depends on you, your strategy, your style, etc. And I'm happy to answer any comments down below, so do comment. But DGI, aka Dividend Growth Investing, big fan of it. And thank you for coming to the end. Thank you so much. Seriously, I supremely appreciate it. So with that, we'll see you soon enough. Peace.